So let's just start with Tesla, since that's the stock that we really like the most. Looking at this yesterday, we had a very nice bullish divergence which was forming, which occurs when we make lower lows within price action, but on the RSI, we make a higher low. So for instance, as price was making that lower low initially, we had an RSI of 1948, followed by an RSI of 27.45. So we could start to see that, which was a good sign. Now, looking at price action, we had a really good price level for the book map yesterday at $170, which we bounced off of, moved up, and held this Fibonacci level. Yesterday, we talked about this Fibonacci level and how if we broke and held under 170, we'd have a pretty good chance of potentially filling this gap. So yes, I'm in a bullish trade on Tesla right now, but I do need you to understand that just because I'm bullish on a 1 hour time frame does not mean that I don't believe that we will eventually fill this gap down to 145. I think that what will probably happen is we will see Tesla, including the market, probably push back up to 190 and reject around this range, and then we could start moving our way back down. So yes, I'm in a bullish trade on Tesla. We're looking good, but it doesn't mean I don't think we can fill that gap within the next couple of weeks or months. But we had this divergence, good push up, solid volume running, which was nice. And now I'm just holding on to the trade. And once we either get up to 190, I'm going to take profits, or if we start to see some weakness, then I'm going to walk away. We have a small level right here at about 180. You can see a lot of consolidation that now will act as a pretty decent resistance, which will also tie in to look at all the resistance coming in here on the book map. So for those of you who look at these book map levels, like on our Discord, on this channel, and you don't understand how to read them, I can do some videos if you guys want, teaching you exactly how to read the book map and why it's so effective. But one of the easiest ways that I can explain it without going into depth is that it's basically a very strong real-time heat map. For instance, you can see the levels to the right, where you can see, like, for instance, 182, 97,341. That means the amount of shares that is set to sell once we hit that level. So that means that it doesn't mean we're definitely going to reject. It just means that there's a big sell order there, and it looks like that could potentially be a resistance level. So if we could break through 182, the next level we'll run to is 185, and then from there up to potentially 190, which is where I would definitely be taking my profits.